Attention self-directed investors. Warning sirens are sounding as a result of an ominous indicator in the stock market and the devaluation of the Chinese currency. But what does that mean practically for you? I'm Bryan Ellis. I'll tell you exactly what it means right now in episode 114.
You're listening to Self-Directed Investor Radio, America's only podcast exclusively for affluent, self-directed investors, where each day of the week you receive innovative investment strategy and deadly accurate market analysis that's untainted by Wall Street and unblemished by government propaganda, all in 7 minutes or less. Coming to you now from iTunes, Stitcher, and SDIRadio.com, here's your host, Bryan Ellis.
Hello, my friends. Thank you for listening to the podcast of record for savvy, self-directed investors like you. I'm really grateful you're here. It's so gratifying to see how you folks are helping us grow. For the last week or so, I've been waking up to see that this podcast has already been downloaded as many times by 8 a.m. as was happening in an entire day as recently as 2 weeks ago. The growth is just amazing. Thank you, my friends. Thank you. I'll get to the info about the stock market and the Chinese currency in just a moment, but I'd like to take a minute or two to make sure we're all keeping our eye on the ball and are investing on purpose rather than just by default. Folks, a very positive consequence of the fact that this show is growing and succeeding is that I'm slowly honing the message that I want to drive home to you every single day. And one piece of that message is that the core value of self-directed investors is this: to respect your own capital. Nobody else will do it for you. That capital costs you time, energy, and effort. Or maybe it's the result of the blood, sweat, and tears of someone else who cares about you. Either way, the time, the energy, the effort it took for you to acquire it, the very life it required for you to come in control of it, makes that capital profoundly worthy of respect. And nobody will ever respect that capital more than you. Not your financial advisor, not the government, not anyone else. That's why we have to demand that every investment choice we make stringently complies with the S3 investing standard of simple and safe and strong. But that's not where the core values of self-directed investors end. You see, there's a core value number 2 that I'd like to share with you right now, and it is this: profit has a purpose beyond wealth. It's a means to an end, not an end unto itself. Do you have clarity about your purpose for the profit you're making? Certainly, part of your purpose is to create financial security for yourself and your loved ones, and that's a central responsibility for you as a responsible adult. But what about beyond that? What about a broader, bigger purpose, maybe even a purpose that transcends just yourself and engages your entire family, maybe even for multiple generations? I'm not going to delve too deeply into that topic today, but can I encourage you to think about that in the coming days? I'll address it more fully in future episodes, but my friends, I will say this. When there's clear purpose for your profit beyond mere wealth building, the clarity with which you operate when making investment and financial decisions steps up to another level. Your perspective becomes greater. Your point of view is more enlightened. Basically, you're wiser, and wisdom is among the highest objectives to which any of us can aspire. So let this question simmer in your mind a bit. What is the purpose for your profit beyond wealth? Now, let's focus on building that profit a bit more, shall we? Folks, 2 very ominous events have occurred in recent days, and you need to understand them. First, China has devalued their currency, and second, the death cross signal has happened in U.S. stocks. Both of those things sound a bit wonky and nerdy, so here's what those things mean in plain language. First, about China's currency. The net effect of their currency devaluation is that Chinese goods will become less expensive, thus boosting their sales and exports, and in turn, theoretically, the Chinese economy as a whole will improve. Currency devaluation is an artificial way to spur economic growth. In effect, this is an acknowledgement from Beijing that trouble is brewing in China. You are aware, aren't you, that the Chinese stock market experienced a major crash last month? Over $3 trillion in value was wiped away in a single month. About a third of the Shanghai Composite Index vanished in just a few weeks. And if all of the comparisons of the Chinese market crash to the Great Crash of 1929 prove accurate, then the Chinese market has a lot farther to fall. Does this matter to you? Yes, particularly if you're relying on Wall Street investments to grow your wealth. To understand why, you have to look no farther than the longtime darling of Wall Street and the business world, Apple. Apple stock has been very weak this year in large part due to the realization that the Chinese economy is weak. Since China is Apple's primary growth market, Apple's future looks far less predictable than in the past. Thus, Apple stock has been very weak, plunging about 14% from its high this year. So follow the chain of events. Weakness in China's economy leads to stock market crash and currency devaluation, leading to lowered profit expectations from American companies like Apple who do business in China, leading to pressure on stock prices and declining markets overall, which leads to the second ominous issue of the day, the death cross signal in the U.S. stock market. Now, I'm not going to bore you with the details of the death cross indicator other than to say it's one of those kinds of market indicators that propeller head types like to use to analyze and predict stock market movements. The basic idea is that the long-term trend of the market is flattening out while the near-term trend has turned distinctly negative. On a practical level, it just means that there's a lot more downward pressure on the market than upward pressure. This signal is certainly a negative indicator, no doubt about it, but it's not necessarily a kiss of death. While there have been some times when this signal materialized and the stock market continued upward anyway, there have been a few times when it materialized and the stock market experienced a real bloodbath. But when considering the death cross in concert with the fact that China is finally beginning to admit the weakness that all informed people already knew was there, well, it's not a good sign. Well, all that's pretty complicated, isn't it? It's really very complicated. The real point of this, my friends, is this. We know the stock market isn't predictable, but it does leave clues. It does give us hints. And the hints it's giving us right now are not positive. And remember this, my friends. If you look back at the last 80 years, the average lifespan of an American, what you'll see is that the average annual stock market increase during that time is in the 6% range. All of this volatility, unpredictability, and overwhelming risk for a 6% average? And you know what? It's looking like the stock market average for this year isn't going to finish that high. My friends, you have better information, better knowledge, better opportunity. I want something better for you. Let me ask you this, and I ask with the utmost sincerity. Do you truly buy in to being a self-directed investor? Remember, that means something. It means something specific. It means that you respect your own capital. It means that your profit has purpose beyond wealth. So ask yourself, my friend, is it showing respect to your capital to accept that risk, that unpredictability, that volatility for something that, in the long run, will equate to about 6%? Will accepting such meager returns enable you to have enough profit for your purpose beyond wealth? There's a better way, my friends. Many better ways. If the time has come for you to think about transitioning out of the stock market, maybe even with just a portion of your portfolio, and into some options that are truly simple and safe and strong, I'd be delighted to talk with you about it. Just go to sdiradio.com/guidance and pick a time. Or if you're not in front of a computer, just text the word guidance to 33444. Again, go to sdiradio.com/guidance or text the word guidance to 33444. My friends, I appreciate you so much. Would you do me a favor? This is what I want from you. This is the favor I want of you. Invest wisely today and live well forever.
Thank you for listening to Self-Directed Investor Radio with Bryan Ellis. Don't miss a single episode. Be sure to subscribe to Self-Directed Investor Radio right now on iTunes, on Stitcher, and at sdiradio.com. Your feedback is always welcomed via email at feedback@sdiradio.com. This show is for entertainment purposes only and is not intended as legal or professional advice for your situation. Content is the property of the Self-Directed Investor Society.